Hey guys, hope everybody's having a great time wherever you are, whatever you may be doing. No trade calls, no recommendations, or response with our own stuff. We're here for educational purposes only. So I thought we'd take a look here at SPX, saying things are heating up a little bit. Again, most of the charts are really stuck in broader ranges, but maybe this could be a little bit helpful. Now, base case assumption is that we're stuck in this 6,000, 5,000 range. Clearly, once we got down here, market administration coming out very market positive, trying to prop things up. And here it almost feels that every time we're back around the 6,000, Trump can be aggressive on tariff headlines, yada, yada, yada. There's a lot of room to run off those lows. So you kind of get a situation where you got a good cop, bad cop around this 5,000, 6,000 range. And wouldn't be surprised unless something really crazy happens for us to hold this range, unless something big changes, right? Now, so again, even if we break higher, you'd expect this top end, these two circles we have drawn in to be fade zones. Now, one thing to keep in mind though is that, here we are going into, a weaker seasonal period. We're going into quad witching. We're going into month end, quarter end rebalancing, probably see some stocks sold. And also the fact that, we've had this rally on a lot of poor structure to the downside. So there's plenty of air pockets to the downside that could be filled. But bottom line, I think it's important to understand that as long as we're in this range, I think you have to be very open-minded, and you can't start talking about, okay, new bull market starting, looking for huge swings to the upside or looking for new bear market, huge swings to the downside. I think you have to trade this as a broader trading range. Now, on the monthly, clearly, this is still bullish. You can slap a 10-month moving average, and this is a very good bull bear line in terms of market timing to get a feel for flows. And it's still bullish right now. Something which is interesting though is that the market seems very, very tired at these highs, and a little bit disappointing that the bulls haven't really managed to get decent traction. And what you can see here, again, following from last month, sorry, back on the monthly, we had this very, very positive month of May, right? I think 30 years since we had such a positive month. But essentially what happened is essentially it was this is a weekly. You had that big gap up, right? And then you had 3 weeks, week 1, week 2, week 3, where essentially we didn't go anywhere, right? And what's happened at the beginning of this month, right into that fade zone, that 6,000 we've been talking about, we popped above, right, beginning of June, and then bam, we're kind of falling back inside that range. So I like to view this as a range inside a range. So what does that mean? Going back to these highs, as long as we're holding above, well, we're in spitting distances of those all-time highs. That high was set outside of RTH, so you'd expect the market to want to take it out. Your base case assumption is that it's so close, right? Spitting distance to those highs, irrespective of what the news flow, the market, as long as it holds above there, is likely going to be trying to take out those highs. And, that's probably where we get a decent setup, right? Because either we take out those highs and we fail, and that's a decent short-term fade opportunity, or we break out those highs and we start to see all the volume that the market hasn't been able to attract here, attracting it above those highs and real full FOMO panicking, and then that sets up massive squeeze. Now keep in mind the market is still really retail max long stocks, max short dollars. Institutions have been pretty much selling all year, so that sets up very aggressive dynamics, both if institutions need to chase the break higher, right? Stranger things have happened, maybe retail's right. Institutions need to get back. That sets up a massive FOMO trade to the upside, right? Or on the other hand, if we start to sell off and retail's caught off guard, usually on those sell-offs, you'd get even more acceleration of everything it has to sell. But if institutions have aggressively sold already, maybe the downside is a little bit more muted because all that selling is being done. Broadly speaking, you still expect buyers to come, but that's an interesting zone to the upside. Now, clearly, I think the mistake a lot of people can make is if we trade back inside this 3-week range we highlight, people get super bearish. right? Whereas I would caution people of switching super bearish if we trade back inside this 3-week range, simply because you have that gap up. This is still, the way we look at it, an orange and amber zone, right? So I think this is still an amber zone. This is a range inside the range, and it's really hard to know anything new above here, above this trade's bid, but it only gets really bullish if you get FOMO above those all-time highs, and only if we get day closes, weekly closes below this amber 3-week range, then it becomes interesting, because you've got a lot of poor structure to the downside, and you've got a lot of gaps all the way down that need to get filled, and the market might want to take a stab at all those, especially, again, keeping in mind we're going into the last 2 weeks of June, tend to be seasonally weaker. You've got rebalancing into month end, quarter end. Stocks should see some selling. So again, that could open an interesting window for the shorts, to the short side, all the way back down to fill a bunch of gaps, possibly all the way into 5,300, right? So that's the way I'm pretty much looking at this. I was trying to think about doing another live YouTube stream, but broadly speaking, I think the market is just in wait and see mode. So we haven't got an awful lot of huge, interesting charts opening up. We've got a lot of ranges inside ranges. Volumes have been lackluster. We've had a lot of RTH sessions on ES where we've struggled to print 800, 900,000 E-minis. So you just have to be patient. Understand that the market is waiting for a catalyst. The market is waiting for a catalyst that is strong enough to bring decent volume and a sustained move. But right here going forward, especially with what's happening in the Middle East, right now the market is telling us it's just a little bit of a scare on energy, not a big deal on stocks, but that could change very quickly. So you have to be careful, and you have to keep your risk in check, especially for the overnight sessions and especially over the weekend. So again, that's pretty much where we are. Hope this was useful. Let me know if you like these update videos. Just reply if there's anything specific, any video you'd like me to record on a specific chart or instrument. If I find it interesting, I'll record a video for you guys. Okay. All the best. Take care. Bye-bye.